Our final founder today brings a rare combination of public sector insights and private sector execution with him. We already know him. Please re-welcome Paul Adrien, who together with his team is building one of the fastest growing regulated real-world asset platforms globally. The stage is yours.
Thank you, Yanis. So I will try to convince you why to tokenize funds, why it makes sense, basically, from our perspective at Spiko. So today, we are, I think, one of the fastest, maybe the fastest growing regulated RWA player in the world. We've launched money market funds, Euro, USD to start with. We are launching GBP very soon, actually this week or next. And we are adding also new asset classes like a cash and carry product, which is the orange one you can see. We have four products. We are live on several blockchain networks. So we have a stack that operates cross-chain, just like a stablecoin issuer like Tether or Circle, for instance. More than $500 million assets under management today, and a lot of volumes processed because our products are used for treasury management. So people moving funds in and out on a regular basis. More than 2,000 investors, mostly corporates. So small corporates and small institutions. And we are growing on average at 15% month on month. Why tokenization matters? So a few elements that I'd like to share with you. First, transparency. In the world of money market funds, transparency matters actually a lot. And most money market funds that exist today in a non-tokenized form are not very transparent. It's very hard to access some basic information like fund concentration, how many investors in the fund, what's the relative percentage in the fund of each and every investor. With blockchain technology, and specifically public blockchains, you get basically real-time auditability, a read access on the shareholder register. Of course, each and every investor remains anonymous, but everyone can see how many addresses, how many cryptographic addresses hold actually the tokens, so the fund shares, and what is the investor concentration. And this is quite important in the money market world, specifically because you never want to be the largest investor, or at least you want to monitor very carefully in a fund. Point number two, costs. When you tokenize funds, you disintermediate some specific players in the value chain of fund issuance and fund management. For instance, central securities depository. Typically, when you register a fund in Europe, you will delegate this to your depository bank, and they will delegate this to a central securities depository, like Euroclear, Clearstream, etc. If you keep the shareholder register management at the fund level, at the issuer level, you don't rely on these players, and basically you are able to reduce costs, and maybe most importantly, to offer also a better product experience, because you have investors directly owning the fund shares in the registered form, not relying on custodians and a lot of intermediaries to hold the shares. Number three, programmability and efficiency is also quite important. And programmability and efficiency in terms of transferability of the fund shares. Once it lives on a blockchain, the infrastructure operates 24/7, block by block, and you can transfer the fund shares very easily. Of course, the recipient must be also authorized by the issuer, because each and every investor is sort of allo listed in the shareholder register. But you can think about very innovative cash pooling mechanism. For instance, instead of using a bank, you can do your cash pooling in money market fund shares across your corporate organization, and you have your money yielding transferable 24/7 and yielding all the time without the need to move back into balance on checking accounts, for instance. And number four, I will focus on that today. You have some very interesting innovative use case that you can unlock with tokenization. And specifically using some DeFi protocol, which enable very smooth borrowings using tokenized assets. So I will explain you basically how it works and what lies at the intersection of tokenization of funds and DeFi, for instance. And specifically in the world of DeFi with the lending and so-called lending and borrowing protocols. So here is an example. You have a DeFi lending platform in the middle. You have a borrower on the left-hand side who's a holder of a money market fund share. Can be any type of fund share, by the way. And you have on the right-hand side a lender, typically someone holding stablecoins, who might be interested in getting some yield on the stablecoin. And the flow of funds works in this way. You have the borrowers that deposits the so-called RWA, so the tokenized fund share as collateral into a DeFi vault, borrows stablecoins that are brought in by the lenders on the right-hand side, and then can do stuff with this stablecoin. And one thing that is enabled by this is 24/7 access to liquidity on tokenized securities, on tokenized fund shares. If on the weekend, for instance, you need liquidity on your money market funds, in the traditional world, you cannot access this. You need to wait for the next business day, basically, and the next cutoff of the fund for your redemption to be processed. Say you are a trading firm in the crypto space, you need some liquidity over the weekend, you have the money market fund shares on your balance sheet. With this sort of setups, you can access 24/7 liquidity, up to the size, of course, of the stablecoin pool that can be borrowed. So recently, we have announced a partnership with Forge, which is the crypto division of Société Générale, whereby we typically integrate stablecoins, so MiCA-compliant stablecoin, by the way, in these lending markets with our money market fund shares. And this is done, by the way, on a DeFi protocol, which is called Morpho. It's one of the leading lending borrowing protocols. I will show you with this video how it works. So it's a very crypto-native front end, specifically the one from Morpho, but this can be completely abstracted if you want to build a product experience whereby the user doesn't have to connect a wallet, sign transactions, etc. So on the crypto-native front end, you basically start by connecting a wallet. And this is a real-world example, by the way, in production right now. So you connect your wallet, and in your wallet, you see the money market fund shares, which are called EUTBL. So that's the name of the share of the Spiko EU T-bills money market fund. What you are doing here is borrowing stablecoins, specifically SJ4 stablecoins, using your money market fund shares as a collateral. You have an LTV ratio, which you need to respect, so as to avoid liquidation. So here you have a 90% LTV ratio. For 100 number of shares, you are borrowing 90 in the stablecoin. So you sign the transaction. This is quite burdensome, but can be completely abstracted if you need. Using the MetaMask wallet, check everything, and then confirm the transaction. And here you're essentially borrowing the EuroCV stablecoin against the Spiko Euro money market fund shares. You will see on the right-hand side the stablecoins appear very soon. And then you have some stablecoin, and you can do whatever you want with this. One thing which can make sense is typically to put it in the same market. If the economic equation makes sense, you can then lend into the same market the stablecoin and basically earn the spread, which is the difference between your borrowing cost and the cost of the lending market. At the moment, because you have very interesting incentives in DeFi, these sort of trades make sense. But they make even more sense if your collateral is yielding more than a money market fund. So I will conclude by giving you an example of what's called the DeFi loop trade, whereby you can repeat this operation many times to increase your leverage. And if the spread between the lending and borrowing rate is interesting, definitely improve the interest you're making on your cash. So here you are using SPKCC, which is our cash and carry fund, yielding typically 8% in USD. And you can repeat the loop as many times as you want. And on the right-hand side here, you see the leverage, which basically increase. If you do 10 loops, you're earning 30% on your cash. And you need to monitor, of course, your borrowing collateral, your borrowing ratio, your LTV, so as not to take on too many risks. But this is something that is very common in DeFi, and what you can do now with tokenized securities. Thank you for your attention.